Bitcoin just hit 30,000 US dollars, and the US Treasury released a report on decentralized finance. What a week. Welcome to our new and revamped Collective Shift weekly recap. Actionable insights and a breakdown into the crypto market, all in under 30 minutes. We have a lot to get through this week. Let's start with the market news of Bitcoin hitting 30,000 for the first time in 10 months.
Welcome, my friends. This is Leon here. So Bitcoin has recently just hit $30,000. Now, it's been a long time coming. We've got a couple of questions about this. The first thing is, will it last? I generally think it will last. I think we're currently in a small bull market, in a little tiny bull market, in the big bear market, that's to say. But the big question I really want to ask is that how does this actually impact you, right? So how does this impact you? For me personally, I think that Bitcoin is going to be $1 million in 10, 20 years. So for me, this price action doesn't mean much, but I want to pass it along to Matt and Nick. What do you guys, how does this impact you? What Bitcoin breaking 30K right now? As we can see on the computer there, we got Bitcoin $30,154 on the Coinbase pair.
Yeah, it's a great question, especially because I think there's a differentiator between, your short-term and your long-term thinking. I'm sort of similar that in the short term, I think people should really understand that perhaps if everybody's getting too over euphoric or everyone's on the same position of things, that can also be a sign that potentially, the market might do the opposite of what we're all thinking to do. But I'm with you, Leon. I'm really looking at those long-term sort of fundamentals, and there's a lot of good metrics out there that show amount of total active addresses, a lot of people interacting with Bitcoin, new Bitcoins that are being secured, hash rate still high. So a lot of these long-term metrics I'm really positive about. But at the same time, I am, cautious about, potentially things easing off in the short term.
Yeah, so we've definitely seen a couple of reasons why Bitcoin might be moving up in this way. For me as well, I kind of just, in recent memory, I'm jogged by the recent banking crisis. We've seen Silvergate and SVB still going through a bit of trouble. And the sentiment currently is still negative out there, not just in the crypto sphere, but in the whole banking sphere. Okay. People around the world are waking up to the idea that their money isn't that safe, or that it's as safe as they thought it was anyway. But guess what? Bitcoin continues to work. Okay. It has gone unimpeded this whole time, and people feel like it's kind of a safe asset. It's a safer asset anyway, or at least it's a hard asset, which is what we like to say over here at Collective Shift. Now, what do you guys, we covered the recent banking crisis. Do you guys think the sentiment is still negative out there? I generally think so.
Yeah, I think we've seen those hard assets, as you say, Leon, are really done well in response to these announcements. But I think, with the backstopping of the Fed basically saying everything's all right, everyone, all your money's safe. We saw all that come in last week, and that really has sort of allayed the fears around an ongoing banking crisis. Here in April, look, we don't really know for sure, but definitely the public has sort of helped gain awareness and gain more of an understanding about the value of Bitcoin and gold. And my final comment on sort of the performance of Bitcoin, the main thing I think everyone should know is just the performance of Bitcoin dominance. Really simple metric. It's just, hey, what's the percentage of Bitcoin? What is Bitcoin's market cap as a percentage of all the world's cryptocurrencies, their combined market cap? That has shot up astronomically in terms of 5 or 6 percentage points throughout the past, basically since the day of the Silicon Valley Bank collapsed. To move that much, to move 8% is pretty big, but to move 6% within 3 or 4 weeks really gives you an indication of what's leading this crypto market rally. And easily, it's as clear as day that everyone is sort of flocking to Bitcoin, both externally and people selling existing cryptocurrencies for Bitcoin.
Yeah, speaking of percentage rises, I'm looking at the charts right now. We have a 24-hour 6.3% increase. That's incredible. We haven't seen this volatility in Bitcoin in a long time. People have been poking the stick at Bitcoin to say, hey, wake up, do something. But that leads me to my next question, gentlemen. Do we think this is sustainable? For myself, I do think it is sustainable at the moment. I think we have had a period of pure negativity for a whole lot of time. Anyone who wanted to sell Bitcoin has most likely sold what they wanted to, and everyone that's left is the people who are very, very interested, who are staying for the technology. And I think, yes, it is slightly sustainable. What do you guys think? Do you think sustainable? Yes or no? Matt?
I think short term, unsustainable. But medium to long term, still very encouraging signs.
Oh, good. Thank you, man. And Nick, what do you think?
Yeah, I'm probably a fence sitter myself, mainly because I try not to predict too much about what's going to happen in the immediate short term.
Yep.
And my eyes are just all over what's going on in like core development, which I'm very positive about and was very positive to end the last year. So keen to see more of the same.
And that's a very good point. Regardless of the price, short term, long term, there is still great technology being developed on Bitcoin blockchain, as well as the Ethereum blockchain as well. So yeah, we'll keep you updated over here at Collective Shift, but I think we should move on to our next topic now.
Yeah, it's a good segue into the big US Treasury report that came out in regards to DeFi. This was coming for a while now, and it was the first report that looked into a risk assessment into decentralized finance or DeFi. So this has major impacts if you're holding DeFi coins or you're in DeFi yourself, because the Treasury is having a hard look at DeFi and its implications into the financial system, especially in regards to illegal, money activity. So this was, I think, quite a lengthy report. I actually haven't delved into the thing 100% myself yet, but was having a look at some really good high-level takes about what was included in it and what was not. So kind of the high level we can think about here is there was a lot of mentions in regards to illegal activity and people using, these DeFi applications. But they also acknowledged that DeFi services were not widely used for this activity, and the traditional finance system was used more so, than DeFi. But it also brought up really interesting issues because the report talked about DeFi and compared it to this traditional financial system, and it sort of didn't draw any hard lines between them. So it kind of raises the issue of anti-money laundering laws that are in place, KYC, and a lot of these other more sophisticated terms that are normally reserved for traditional finance, and they're looking at applying them to DeFi. So really big report, and the high level here is that no real fundamental changes happens, but it does show that, there could be some changes on the way. And at this stage, we just don't know, but it's an underlying risk factor, I think, for DeFi applications, which we saw actually earlier this week, DYDX come and withdraw from the Canadian market because of these regulatory risks. So we're really seeing the effects of, the report and a lot of uncertainty around how DeFi fits in. What laws do they have to obey? And DYDX, one of the largest DeFi applications, has already started withdrawing from some countries.
And I think the reason why DYDX started withdrawing from Canada is they said that it's just not optimal regulatory environment. And this is the same thing that's happening in US at the moment as well. So if you hold DeFi tokens, then you might possibly be affected in the coming months, years, because the Treasury department in US is now looking at DeFi. Okay, but what I do like, Matt, was that at the end of the entire report, as Nick pointed out before, they said, we know that normal cash and the US dollar is used way more than crypto or Bitcoin for illicit activities. And for me, when I saw that, I was like, they're at least recognizing it, right? They're recognizing it.
Yeah, it was pretty, surprising or, to see them, really sneak that in the report, acknowledging that, yes, there's problems with money laundering outside of the crypto space. So in that sense, it was sort of, somewhat fair, at least that section of the risk assessment. And, I think we've sort of flagged this coming for several months now. It was due in February, came in early April, typical sort of bureaucratic process. But we've also got the NFT report. A similar sort of risk assessment is going to be done on NFTs. Watch that to come out, around the middle of the year. I think it was July, Nick. So that means probably September. Yeah. But another sort of risk assessment. And, to think even DeFi 2 years ago, the term barely existed. Now you've got the actual US Treasury reporting on it. So yes, extremely important to know about. No real action items from it, but, it's just the scrutiny and the sort of, assessments of crypto and its categories are sort of continue to increase, which is extremely important for long-term crypto investors in particular. Sort of move on here to like the latest, in the past week, another sort of major development was another week of sort of events related to Binance, probably the world's largest crypto company and definitely the largest crypto exchange. We saw recently, in late March, it kind of made sort of global headlines when Binance or three of its entities were sued by the commodities sort of agency in the US. They were sort of alleging that they violated a bunch of different laws related to anti-money laundering and counter-terrorism. We'll see what Binance responds with a full response coming out soon. But it was another week and sort of some more negative press. This time we had sort of news coming out, reportedly Binance US. So yeah, the Binance exchange that is only serving US customers. They are reportedly struggling to find banking partners. This is something that, we've been covering a lot at Collective Shift the past 12 months, sort of, this sort of banking issues with crypto companies. It doesn't really have a direct impact on us as everyday investors, but overall, it's extremely important, in my opinion anyway, to have US banks in particular be their relationships with crypto as an industry. That's something that's always worth monitoring. So when you see Binance US struggling to find banking partners, it's just another signal that, hey, things might not be going so well, either A, for the crypto industry, and or B, Binance itself. So we also saw last week, speaking of sort of Binance related, press or news, there was also came in that its Australian derivatives sort of license was cancelled. But yeah, that did come in after a request from Binance for it to be cancelled. It's worth sort of pointing out that got lost in sort of, under the headlines. Yes, big scary headline that it was cancelled, but at least the reports from the news was that Binance itself asked for that to happen. Only about 100 users were using Binance's derivatives in Australia because apparently they've had it frozen for, a couple of months now. And they're sort of, paying back all of those users and closing their positions and whatnot. It's just sort of another sort of data point to take into consideration in terms of, how Binance evolves throughout 2023. Again, why does it matter? It wouldn't matter if it was any other exchange, but I think it's important to keep track of what's happening with Binance just because it has the potential to sort of have an effect on markets if there is sort of this seismic news, particularly out of the US, if they're sort of coming after Binance, for example, if that continues in April and May and throughout this year, that may have sort of a drag on crypto prices as we sort of, move into what is looking like the start of a long-term sort of bull run.
Yeah, and to bring it back for everyone else, all the Collective Shift members out there, if you're watching this video, this just means that it might impact you if Binance starts getting targeted by the US government or by any other regulatory entities. That means that they might be able to stop trading, which means you might not even be able to withdraw your coins, right? This is all so far like just extra things that could happen. It's just we're trying to say that you should keep an eye on this, okay? And we try to advocate for security and safety here at Collective Shift. Don't keep any of your coins on the exchange. If you are worried, if you think regulation is going to be bad in the coming weeks or months, get your coins off the exchange, put it on the ledger, on a cold wallet. That's what I think we should do. Yeah.
Yeah. Well said, Leon. Always worth pointing out. And I suppose with that sort of US, yes, we talk a lot about US regulations and their attitudes and their scrutiny of crypto. But probably a main sort of, narrative and just trend you've been seeing over March and even into early April that I think is worth covering this week is just sort of, other countries and jurisdictions. I think we do have examples now where other countries are sort of, taking the opportunity to sort of be a bit more accommodating towards crypto. So it's not all doom and gloom out there. We've got a number of countries such as those in sort of the United Arab Emirates. Singapore has always been pretty crypto accommodating, but they're continuing to evolve. Japan has always been pretty behind in terms of their crypto friendliness, but they are sort of continued to warm to it. UK is another one. And of course, probably Hong Kong would be the most notable out of the last few weeks where they are, really starting to, up their involvement in crypto. and welcoming sort of businesses and starting to, reportedly starting to open bank accounts with a number of crypto companies that previously really struggled to develop banking relationships. So we just thought, yes, a collective shift. We try to keep balanced, and we do probably cover a lot of US centric stuff, but only because we believe that's what is most important to you out there. But also worth remembering from time to time, things are progressing pretty well in non-US areas of the world.
Yeah, just add in there, Matt. You spoke about Singapore and Japan. Yeah, they both had two interesting announcements this week. Singapore's looking at releasing an industry report to exactly work out any more specific guidance for these crypto businesses. That was reported by Bloomberg, and then Blockworks reported that some members of the Japanese government released a Web3 sort of report geared at how to handle cryptocurrency and these emerging industries. So we got some two positive announcements there, and as you said, Matt, the key takeaway is, although we can be easy to be doom and gloom about these harsh regulations in the US and harsh attitudes, but ultimately, if crypto is to be an actual foundational technology and something that has staying power, ultimately these other jurisdictions are going to want to capture that. So hopefully in the next couple of years, that may be to the detriment of the US, but hopefully we can see a lot of these crypto companies start to thrive elsewhere.
Yeah, certainly. It certainly looks like how it's playing out, but a lot of water to go under the bridge. I think in terms of just the next week ahead, when we talk about major events happening in crypto, probably the one that we did want to highlight this week was the enabling of ETH withdrawals. That's the next it's part of a next major upgrade for Ethereum. But what's it mean when ETH withdrawals are enabled? Just means that people who were staking ETH, since they're all the way back to December 2021 and onwards, they're now able to withdraw that stake, and even the rewards they've been earning on that stake throughout the past months or even years. That will be sort of happening, scheduled for late on April 12 UTC time, so about Thursday or so Australian time. And we've seen a lot of conversation about the price implications on ETH. So later in the week and towards the weekend, you'll probably see that play out in real time. And personally, I'm looking forward to having this chapter close and all this speculation, because at the end of the day, it's pretty. I think when we look back on 2023, it's not really going to be that much of a talking point. But yeah, I'm not sure about what you thought, Nick, about this week ahead for Ethereum in particular.
Yeah, so as you said, it's basically closing the chapter to the merge. It was the final thing that needed to happen to complete the merge upgrade officially and get it all done and dusted. So I'm the same as you. I'm keen to see how it plays out. Interesting to see if there's going to be lots of sell pressure. We have a lot of good resources and information, previous YouTube videos, which we can link in the bio for this, and exactly why I personally think that isn't going to be the case, and why it's net positive overall. That encourages more ETH to be staked in the long term. So I'm kind of interested to see whether my hypothesis will play out in that 1 to 2 year period. And then again, whether that short-term sell pressure would be negligible if you look at the long-term projection of this sort of thing.
Yeah, for sure. I'm looking forward, and hopefully it all goes through smoothly this week. And then we'll probably wrap things up, gents, with sort of a new segment that we're introducing. Sort of one thing from the past week that you think either was overrated by the market, or conversely something that you really didn't think many people even appreciated, or the sort of context or nuance got lost in the headlines. This is something that we're really looking to include, just as a way to wrap things up and to try to deliver some more value out there to you viewers and listeners. Nick, I'll hand over to you to kick things off.
Awesome, thanks for that. One thing I thought was potentially maybe misinterpreted or overlooked, and a lot of focus is on AI at the moment. So there was another big, I think, cryptocurrency raise that happened, about 10 million for something called Crypto GPT. For those unaware, you have this big narrative at the moment with AI. A lot of focus is on AI. So we're just going to see so much of cryptocurrency projects start to launch geared towards AI. And this is just another one that I think is important to urge caution on, especially when you're seeing a lot of buzzwords maybe you're not sure exactly why it needs a token or why cryptocurrency is involved, if the team doesn't look right, a lot of these questions that are coming. I saw a lot of red flags with a few projects that were out there raising big money. So maybe too much focus on that crypto narrative at the moment, and a lot of people maybe trying to make a quick dollar out of it.
Yeah, nice, Nick. Always something to really pay attention, read through the documentation of these projects and understand why does this need to exist, if at all. Question the team. We got a lot of resources at Collective Shift that sort of break down, things you should look out for and red flags over on our resources section. My one for this week would be probably actually the airdrop that OpenSea Pro sort of shared or distributed. So they were formerly known as Gem, and this is sort of an NFT. It's basically just a website to log on to, or an app to log on to, and buy and sell NFTs to really dumb it down. They sort of announced an airdrop. So for anyone who, in the history of what was formerly known as Gem.xyz, if you ever use that platform to buy and sell NFTs, no matter how much no matter how much like ETH or capital you used, you were entitled to one airdrop sort of per wallet or per address that you interacted with. So I was actually surprised to see 4 on my 4 wallets of myself, so we're eligible for that. And at the moment, they're trading for 0.05 ETH. So you've got to claim it when gas is sort of pretty cheap. Gas is sort of pretty cheap at the moment because I think there's a big NFT conference this week. So all the degens will be, away from their keyboards. But, it's some sort of reward. I think Nick and I actually discussed in a recent YouTube video why we don't think OpenSea will ever tokenize. I think this is sort of their way of having this sort of half measure of trying to, appease their sort of users, many of which have sort of deserted them, and sort of try to bring them back to their platform. Personally, I think they're really going to struggle for that to work in the medium to long term. However, it's a nice sort of thing, I think, that many people didn't even actually hear about in the last week. And it kind of goes to show it's sort of a reflection of just how much OpenSea is struggling to gain awareness when the announcement of their token or an NFT airdrop sort of wasn't even heard by many people out there. So go and check OpenSea Pro. Be aware of scam links and all of that. We'll drop in the necessary link below to just go and see whether you're eligible for that airdrop. And with ETH sort of ripping in price higher, it can turn out to be, a decent amount, for some of you out there.
Well, thank you very much for sharing that. I didn't actually know that they had released the token so far, which is exactly your point. No one hasn't made the news, which is crazy. And it's also interesting to see if they do claw back market share from below marketplace. We'll see. And also, what about the regulatory risk of Coinbase and Coinbase Pro? There's a bit of issues there that could be. But I'll share mine. Mine is actually very, very simple. Hopefully you guys don't laugh about it, but it's very simply, I needed a pickup in the bear market currently at the moment. And, Michael Saylor, he tweeted again, and I guess you guys can probably, guess what he tweeted about. MicroStrategy has recently bought more Bitcoin and added it to their balance sheet. And for me, every time I see that in the middle of the bear market, when you're wondering if you should change your DCA strategy or, stop DCAing or just sell some, you're like, no. You listen to MicroStrategy, you listen to Michael Saylor, and it just makes me feel really reassured. So it's not quite alpha. It's not quite anything that was missed by the market because he does make a regular tweet about it. But here we go. MicroStrategy acquired additional 1,045 Bitcoin for 30 million. And they hold 140,000 Bitcoin. Jesus Christ, for $4 billion average price of nearly 29 and 8K. My God.
Hey, so they're in profit. They're in profit.
Yeah, they're in profit. I think they just broke even like the last time and they're in profit now or something. So that's good news, right? That's really good news. For me, that's like very simple. I really needed that. Thank you, Michael Saylor. Thank you, MicroStrategy, for just alleviating me in this bear market. And that's it.
No, I love it, Leon. Great way to wrap things up on as we celebrate Bitcoin's return to 30,000. And certainly Michael Saylor's probably celebrating as well somewhere out there.
Yes, he is. Yep.
But yeah, thanks, gents. That's a wrap for this week. Looking for more insights? See our revamped weekly Shift newsletter, providing free weekly market upsides insights every Friday. Subscribe at collectiveshift.io/newsletter.